Hello everyone, my name is Kevin and welcome to my channel. This is the Compulsive Investor Channel. If you like what you see or you get anything from this video, please like and subscribe below. That way you'll be sure not to miss out on any of my future videos. So let's get started. In this video, I'm going to talk about why I love to invest in Akron, Ohio. We're going to talk a little bit about the 1% rule and why that is so important. And then we're going to take a look at some actual numbers. So first of all, there are a lot of good things happening in Akron, Ohio. The city has invested a tremendous amount of money in jobs. We have the Amazon distribution center that has created a lot of jobs in the area. And a lot of these jobs that were created are hands-on, blue-collar jobs. And that is what helps to make Akron, Ohio a recession-proof city, because when you think about it, a lot of times when there's a recession, well, what jobs go first? You have the manager positions, the supervisors. A lot of times the blue-collar jobs are the ones that tend to survive for the most part. Now let's take a look at some numbers. The numbers are very important when securing financing. A rental property must meet the 1% rule, and that is that the unit must rent for 1% of its total cost. So in other words, the monthly rent must be equal to or greater than the total cost of that investment. So let's take a look at an example to show why this is so important. Take a look over at our calculator. In Akron, you can purchase a property and with renovation and all costs for about $50,000. Now this is just an example, but a lot of my properties are under 50 and put a few into it, so you end up being around 50,000. So we're going to use that for an example. So if you multiply that times 1%, you get 500. So a house in Akron has to rent for $500 in order for it to meet the 1% rule. So in reality, in Akron, you can rent a room. That's about what you can get for $500, especially like up close to around the college. So you're actually more realistically looking at around $1,000 a month is what you would rent for maybe a 3-bedroom property that you could buy for 50 grand. So when you're looking at that side, you're exceeding that 1% rule, and it's actually 2%. You can take that same $50,000 multiplied by 2%, and you get $1,000 a month. Now that's very important. That is a very good number. Again, we're gonna take a little bit of time to talk about that and why that's important. But before that, let's talk about another example in another area, which basically right next door in Kent. Kent's a wonderful city, but let's take a look at what an example of a rental property in Kent. The median price for properties in just this last quarter for a 3-bedroom house was around $200,000, and don't quote me on that. I just did a quick search online for this video, but it's approximately $200,000. So if you go back to our calculator here, take 200,000, and then you multiply that by 1%. That property must rent for $2,000 in order for it to meet the 1% rule. Now you might have that happen, but it would have to be really updated, new appliances, expensive upper class appliances, so you could do it. But more realistically, you're probably looking more at around $1,400, $1,500, maybe $1,600 a month for that property. So when you look at it this way, it does not meet that 1% rule. So why is this significant? This is significant because of asset-based lending. Now I'm just going to add a little caveat here. If you'd like to take advantage of the low interest rates you can get at your hometown bank, that's a fantastic idea. But you got to remember that those loans are going to be on your own personal credit report. and you're going to have to qualify with your own personal income. And I believe you can only have, I think, 10 properties, I think it is, in one person's name. So at one point or another, you're going to be looking at something called asset-based lending. And that is where the unit itself is financed by itself based on the income that that unit produces. And these kind of loans do not appear on your personal credit report. They're completely separate. And that's the fantastic thing about them. Now, I think in the future I'm going to make another video that walks you through that process with one of my lenders. But now let's go back to the 1% rule. An asset-based lender will not lend on a property that's less than 1%. So if you want to get that asset-based lending, you have to meet that 1% rule. It just makes it easier to fund your properties. So to sum up, in Akron you can get really low cost properties with a high rent, where in other areas you can get higher cost properties with not much higher rent. You can do the same thing in other markets as well, but Akron is just my personal gold mine. Now let's take a look at some returns. My wife and I purchased our first 3 properties for under $20,000. We were able to put a few grand into them, and with a lot of sweat equity, we were eventually able to rent them out. Our very first property was a tiny little 2-bedroom, 1-bath ranch in Ellet, Ohio. It was in a beautiful neighborhood, and that property has been a cash cow since we first rented it out. We paid $15,000 for it, put $4,000 into it. It now rents for $835 a month and cash flows for $582 after expenses. So let's take a look at those numbers. If it cash flows at $582, we multiply that by 12 months and then multiply that by 7. We purchased this property in 2015. So it has produced almost $49,000. So this property paid for itself about 4 years ago. So at that point, it became what is called an infinite return. That's when you take all the money out of it that you put into it, you take that money out and put it into your next property. All your money's been moved out. That property is now an infinite return, constantly giving more cash flow. And that's a magical thing in real estate. And you can do this in other places as well. But me, starting later in life like I have, I want the highest return that I possibly can get. And that is why I love investing in Akron, Ohio. In my previous video, I talked a little bit about my business systems and my standard operating procedures. My next video, I'm going to describe some of those SOPs, and I'm going to talk about why they're so important to have for your business, and I'm going to even walk you through one of them. So, if you got anything from this video, please like and subscribe down below. That way you'll be sure not to miss out on any of my future videos. Again, my name is Kevin, and this is the Compulsive Investor Channel.